And welcome back to the Lion Impact Podcast. We have a special guest with us today, Hillario Rukobo. He's a retirement planning specialist, and he's going to tell us a little bit about stocks and investing.
All right, so Hill, tell me, what is a stock for our viewers who just don't know? What's a stock, and how can we use that stock?
Okay, I mean, pretty much a stock, it just means that you're owning a share of a company. So pretty much it's stating that you have ownership in a company and a stake. So by that stock, you're hoping that that share appreciates with the company based off of profit flow, cash flow. You're hoping that the profits will go up in the future. And so it's basically like part ownership of a company by owning, part of a stock.
Right. So we hear this big deal. What is the big deal about stock? You get on TV, you hear it on YouTube, and everybody's talking about investing, getting involved in stock. What's the actual big deal?
I mean, you get to own equity in the company. And so by doing that, you get to, make money in the short term, long run. And so it's a big deal because
just gives you an opportunity to kind of make money through another company.
Yeah, pretty
passive
much.
income, correct?
Passive income, yeah. So if you're trying to diversify your portfolio and you want to make sure, money's coming in, why not own assets? So a stock is like one of those asset classes that I feel like you would have to own and just trade it or hold it for the long term, short term. So it just depends on your strategy.
Okay.
Yeah.
How would you say you should pick a stock? What do you base it on? I mean, I know investing in the stock market is kind of probably not that complicated, but how do you know which one you should go for?
Much you would want to look in a company that you think is going to disrupt certain sectors. So for example, Airbnb just released an IPO. A lot of motels and hotel companies are scared that the business model that Airbnb has will disrupt that sector. And so that's something that you can invest in the long run in the growth. And so looking for a stock, you may want to look at their balance sheet, see if they're profitable, look at if the stock offers a dividend. So I mean, it's pretty vast. Look at what's their future business models, look at their earnings. So there's certain things you want to look at. Me personally, I like to look at technical analysis, not so much fundamentals, but fundamentals is also important because it can also be a main driver for a stock if it follows its fundamentals.
So in a sense, you're kind of trying to predict the future based upon a company's behavior and how they run their company, if they're doing well and how much money they're making. So you're pretty much almost, I don't want to use the word gambling, but you ever seen movies where people, I can't remember the name of the movie, where people kind of, they'll bet on certain games and they'll go, hey, the QB, he just got a divorce. Right. He's not going to play well.
Shoulder.
Right. Based off of that, I'm picking this team. Is it? Right. Is there anything?
It's sort of like that. So it's what made me get into stocks really hard was doing fantasy football.
Okay.
So, I mean, you pick a player based on the information the stats, injury history.
Right.
There's a lot of analytics to all of it. Their weight, height, what system they're in. And so, we don't want to go into too much detail how to pick a stock because certain people just don't care about the fundamentals. So it's a pretty broad question. I mean, it's a good question, but that's how I looked into picking my stocks. What does it make sense for me? So I always tell people, find a stock that makes sense to you for the short term, mid term, long term. Some people are not long term traders. So
as a new person coming in, you have $100 that, you've kind of put to the side. You don't know anything about stock and you're thinking, okay, let me get my feet wet here. What would be the position you would ask them to take? Besides, okay, I've gone on Google and I've did some research on YouTube. After doing some research, now it's time to spend that $100.
Right.
What should I do now? And I only have $100. I don't have 1,000. I don't have five. I got
28K, right?
Right. I don't have 28K. I'm just somebody who, first of all, I'm reluctant because I feel like I'm gonna lose my money.
Right.
So how about I start with $100? Let's see what happens here.
That's a great question.
Or are you saying the individual should be like, hey, you know what?
Let me do my homework first.
Should you stack up more money Or can you start with $100 to play with?
I've seen some stuff where people flip $100. Like, honestly, to answer that question is pretty much like, you should ask yourself. So like I would tell that person, what is your goals? Mm-hmm. What is your short-term goals? Mm-hmm. What is your midterm goals? What do you think you're going to make the $100 in 1 year, 2 year, 3 year? So you have to like be realistic with yourselves, because a lot of people tend to think that, oh, it's a quick rich scheme. It's not. It's
something you have to work.
It's not quick. Unless the other day, this one stock shot up, I think like 2,000% in one day. So like if you're like that lucky individual who just got lucky, put like $5,000 and you made, like, do the math, that's what's 2,000 or 20 times, like, you know, so like 20x in your money. So like, but the average stock is not going to do that. So like you're going to have your lottery days. I never had that kind of return in one day, whatever. But
guess you wouldn't be talking to us if you did.
No,
if you're somewhere in Dubai hanging out, you know.
But you just, I'm trying to get my friends and people who are interested to understand percentage.
Okay.
I want you to understand percent, because if I said I made 50% one day, all right, cool. Well, how much money did you have in it? Some people, $5. Well, it was 50, $5, and then $100, 50. And so you have to be realistic. And so what is your goal? Mm-hmm. And so once you gauge that goal and you know how much money you want to make, then you got to find that stock that's volatile. And so it kind of gets itchy because people have different risk tolerance. Some people may not be able to handle the volatility. And so
it's almost like the spirit of gambling. Going back
it's
to
calculated risk. It's not gambling.
Well, okay, educated gambling, right?
Life is gambling. We gamble. You wake up every day, and every decision you make is a gamble. So, to me, the stock market's like life. It may sound very shallow, but stock market reminds me a lot, because every choice you make in life, like you're making a calculated risk, believe it or not.
Right.
You know what I'm saying? Everything you do in your life, and that's how I take stocks. Like, I'm trying to make sure I build wealth for my family and for my kids. And, my dad, he's the one, he's got me into it because he's really big in trading. And so like when I saw him doing it, then I was just like, dude, I got it. Because he tried to get me on like a long time ago when I was like 19 and I was in college.
Kind of stubborn at that point, right?
You're just spending stupid money.
And you're kind of waking up to it.
Yeah, now it's just but
okay, so now somebody comes in and they say, all right, man, I think I need a stockbroker. What does a stockbroker do? And can that person actually use a stockbroker? Is it necessary?
Well, I'm not trying to kill any stockbrokers.
No, go ahead. They'll be okay.
Yeah,
they'll be fine.
So with the stockbroker, I'm trying to be a stockbroker at my job, whatever. I'm trying to get licensed. So it's very useful if you're not, because investing's not for everybody. Investing is not for everybody. You know what I'm saying? So if you still want to have that like mindset of I still want to make my wealth work for me, my money work for me, I may need to have someone to do it. So like a financial advisor or stockbroker, they're basically the same thing. It's really good for people who are not really so much into like investing, but they want someone to manage their money. And so it's really up to the individual. So a stockbroker is pretty much someone who like place a trade for a client or for the company when they're maybe on their trading desk. So basically it's someone who's a licensed registered individual with the SEC, FINRA, like, so you get your Series 7, your Series 6.5. There's more series licenses for different securities you can trade. So like, that's basically what a stockbroker is. In the old days,
they do it for you pretty much.
Pretty much, yeah. So in the old days, they were very like prominent because like, you didn't have computers. You really couldn't do it yourself. You had to like call them and be like, hey, I need you to buy apples like at $10, blah, blah, blah. And they'll like.
So technology just killed them pretty much.
It's killing them slowly.
Do it yourself.
Fintech is killing it, yeah. Stockbroker would be around forever, I feel like. But like, when everything's becoming automated and AI, I don't know. Like, we may not.
But then again, a lot of people don't want to go ahead and do all that research and studying stocks and stuff like that. And that's where stockbrokers come in, correct?
Right. And then you have to pay that commission, broker fee. And so, it just depends.
Small price to pay for convenience, right?
Right,
simplicity.
Exactly. And that's what I was just going to bring it to. So the advantage to a TD Ameritrade and the other companies alike is that there's always someone you can kind of just call and say, hey, listen, I need this done. And as far as explaining things to you, I guess with that customer service, that's always there for you, where that's a disadvantage when you're doing it through an app. Really no one to call And if you just lose, you just kind of lose.
Out of luck right there, huh?
Right.
Yeah. And
Okay.
I always tell people, like, you can always pick which one to pick, but I always tell people, like, if you're not trying to, like, trade hardcore, or if you are trying to trade hardcore, me personally, I'll stay away from Robinhood.
Okay.
Yeah, but I mean, I'm nothing against it.
No, of course
nothing
not.
against Robinhood, for real.
Okay, so now you got Robinhood. So now our viewers know, stay the heck away from Robinhood. How do you feel about then the Cash App? And I think you mentioned
Acorn.
Now, are they very similar in their behavior?
Similar, yeah, very similar. So I'm glad you asked that too, because I was going to tie it in. If you're not a hardcore trader, if you're not, if you're one of those people where you just want to put your money, you don't really want to look at it, and then Acorns, Cash App. I think Cash App did it like last year or 2 years ago. I use Cash App too sometimes to buy stocks. But I got more serious. I just started using my employer's broker. But yeah, I mean, that's pretty much in that ballpark. The only difference is some of those apps like Robinhood and Cash App and Acorns, it's good for passively investing. But if you're trying to find a specific stock, you may not find it. Some of those, like sometimes it may not be listed. Like they don't offer.
They don't offer all those.
Like a lot of the penny
varieties.
stocks, exactly. So with Fidelity, like Charles Schwab, if you want to trade pennies, it's called OTC, over the counter market, where it's not like traded like in the exchange. So it's over the counter and it's traded electronically. Those are the ones where it's risky. So that kind of ties in with the penny stocks. So it's called OTC, and then you have like your New York Stock Exchange, and
Okay, so now and I've noticed that because I've played around with the WhatsApp. WhatsApp. The Cash App. I apologize. The Cash App app, as far as stock and all that, and I just wanted to kind of get my feet wet, just to not knowing anything about this,
right?
And I'm hearing a lot about it, and no, I don't want to be a massive trader. Not at this point. At this point, I just want to get involved and learn and make some mistakes. So I would take, $5 here, $10 there, and just to see what it does.
Nothing wrong with it, yeah.
Right. So then I would see what it does, and then after putting in $5, and then I would see it kind of drop the first few days, and then I'm like, and then it would increase. I think about the first stock I ever bought was with Apple. And that's how I knew about the switching, because they sent me a message, and I was like, what is this? Whereas I guess that's the disadvantage, where if I was with a bigger company, they could take their sweet time explaining it to me. Whereas with Cash App, I kind of had to read and understand it to the best of my knowledge, which I guess is good because we do have YouTube. You could always go and find out anything. But to your point, I see a good disadvantage, or an unfortunate disadvantage is, I know I was looking up, I can't remember what it was, but I wanted to invest in something that someone said was a good idea. And when I went on Cash App to look for it, it wasn't listed. So you are exactly right.
It's crazy.
I know that from experience.
It's slowly they are releasing, like Robinhood has way more options than like Cash App, because Cash App is still kind of new. So like they're slowly, but they mainly focus like on the mainstream stocks like Johnson & Johnson, Ford, Tesla. But like some of these stocks that have been coming up, like I don't really use Cash App. So yeah, it sucks if you if you miss it. I just feel bad, because I was just like, you missed the opportunity. Like, oh my gosh, I only have Cash App. You need to take the time to like open, because you're like, when you get started with the apps, like with Robinhood and Cash App and all that stuff, like it's easy to sign up. Boom, you're done. Whatever. But with like Fidelity and all those other companies, like they ask, like it's like they're the FBI. It's like because they ask all these background questions, like, does your family sit on the board with the SEC or and like all those kind of questions, and so it's kind of tedious. It kind of
make sure you're not doing no inside trading.
Yeah, you have to do an application. They have to approve. They ask for your income. Robinhood, dude, everyone can make it with it via Cash App. It's quick. No questions asked.
So essentially, our viewers who are new to the game, because I know there's two sets of people that are probably going to be watching this. It's your set of people that are much like yourself, that are pros, and then
pros, more seasoned than me,
right? And then, but the majority of us, including myself, you too, Esteban, we're just trying to get our feet wet. And I will say, I'm happy I did start to try it, because even though I was only doing $10 here, $20 here, just kind of throwing my money in there. It feels good to wake up in the morning and check Cash App,
Greatest feeling.
right? And see that, I've made $2. No, I know it's just $2.
Profit's profit.
Right,
exactly.
I always tell people profit's profit, right? It's all relative.
Yeah.
You know,
Because it was $2 you didn't have.
Yeah.
Yeah.
I mean, and really it's getting to my head because I know one day I was looking at it and I started walking around like I was the boss. I felt like I was Diddy or something. And, you only made $2, man. Calm down. So, but it was just a really empowering feeling to know that, okay, I think I'm getting involved here. Yeah, okay, it's just a few dollars, but I think everybody has to start from somewhere. So he's absolutely right. And I would definitely ask viewers who are beginners such as I was to start with $5, $10, and then
work their way up.
Right. And as you educate yourself, then go into the bigger TD Ameritrade.
Starting it off right again.
all right.
How would you explain what a Writ is?
Pretty much it's a real estate investment trust. That's literally what it stands for. Basically it's like a stock or it can be an ETF where they're in the business of owning real estate properties that help generate income or they help finance real estate properties.
Mm-hmm.
And so that's pretty much what it is. So basically stocks that and they really generate really good dividend yields.
Mm-hmm.
So they take the rental properties or whatever commercial real estate that they're using, and they will use those profits to pay out like their shareholders dividends. So it's another way of getting passive income. And I think last time I checked, it was worth like $3 trillion. But I know with COVID, real estate have taken hits, especially like in New York.
What about a municipal bond fund? What is that?
You're giving money to like a local government, pretty much local government, and you're giving them money to borrow for a certain amount of time,
Mm-hmm.
and then you give them their principal, and they're promise you with interest
Mm-hmm.
at a certain time frame. So it's kind of like owning like U.S. bonds, and the local government or the local authorities, they'll use that bond money that people are willing to give to the government, and they'll use that money to fund like infrastructure, like parks, roads, construction,
Okay.
and so. So you're supposed to be generating a certain interest in return, and that their maturity, and then you're supposed to get the principal back with the interest you made on it. But depending how the interest rates fluctuate, your bond value can also fluctuate as well. So they tend to be for safe. If you're not really looking for like volatile stocks, people especially with a lot of money, they like to just park their money in bonds and then hopefully take it out and make it a little smooth return. So it's not. I want to say it's like.
So that's like
it's
a long-term
the most
investment?
safest, but it's like easily like top 5 safest thing to get into. So
And that's something that's like
long term, short term. Yeah, people put they'll buy municipal bonds for their children and stuff like that.
Oh, okay. So it's something you can pass on down.
Yeah.
Okay.
Yeah.
What about index funds?
Index funds. So index funds are pretty much it's a fund where it tracks indexes. So if you're familiar with like the NASDAQ, the S&P 500, the Dow Jones. And so they tend to follow the performance of an index.
Mm-hmm.
So it can be a mutual fund or an ETF. And so it's not just indexes as well. They also have certain type of indexes where they also put it's like a basket of different companies. And so instead of like worrying about one individual stock and this one might be too volatile, you're going to buy this one fund that has like 5 or 40 different companies in a certain sector, whatever. And it kind of like hedges. So this one company might be doing really bad, but this other one is doing really well. And maybe this other 4 are doing really well, pulling its weight, and it causes that overall fund value to go up.
What about penny stocks?
So penny stocks is pretty much, according to the SEC, it's pretty much anything that's less than $5 a share. So that's considered a penny stock. So it tends to be like this conception that, this penny stock is like, it has to be like 30 cents, or sometimes a penny stock can be micro, like 0.00005. I've seen like penny stocks like that.
Wow.
That's micro, a penny. It's crazy.
That's crazy.
What kind of companies are big? Wow. What kind of companies do that?
Fraud, pump and dump scheme. I mean,
Really?
Technically you can put your company in, I think you have to like do some file. I'm not sure how you would do it, but like, That's kind of how Jordan Belfort got in trouble with Wall Street. He was doing those pump and schemes, whatever. Some of those companies didn't even exist. But back then it was easier to like say, oh yeah, he was a stockbroker, telling people, hey, there's this startup company in the garage who they may be the next like Microsoft, and it's not even, it's like some dry wash. Like,
okay, so now you're talking about risk, right?
I've blown accounts.
As you talk about risk, a lot of people don't want to get involved into stock because they feel like that's just risky business, right?
Exactly.
So now, what's a mentality that you could kind of explain to us as how important it actually is, and maybe you should be afraid of not getting involved as opposed to, I'm throwing my money away. You know, we mentioned gambling in a joking way earlier, but some people really feel like, what? I'm going to give my money to someone and they're going to make the decision as to whether I make it or lose it, and I'm not involved. And, you know, especially for people who work really hard for their money, they might not be able to, you know, swallow the fact that I'm not in control of this here money.
Right.
What would you say to people like that to maybe settle their heart or mind to say, this is not what you think it is, and let's educate you to it?
That's a really great question. Because a lot of this stuff really just comes down to the individual, how much risk they can tolerate. So it's called risk aversion. So with myself, I think I'm a little bit more riskier compared to the average like trader and investor. And so I will probably set big positions on my trades relative to my account, but you have to be disciplined on like, what are you willing to lose? So that's the question you should be asking yourself. And then based on the stock you're owning, you can look at it, you can tell this is the downside and this is the upside. So once you understand risk reward ratio, and you just have to like break down, show that person like this is like everything's a probability. Like that's basically how you win in the stock market. Once you understand the probability of a winning trade or the losing trade, and then it starts to get a little bit more, you become more comfortable, whatever, because you just have to do the research on the company to figure out, is it really worth my money?
So that means whatever the media might say about your company can also plummet your stock.
Yeah.
So I see now why, if you've ever seen, they'll talk about how traders or whatever are kind of watching out for what the president does and what a war is doing. And now I'm starting to understand why that plays such a role
in the stock market,
into people's decision making, where people kind of get nervous at times.
You have to, you have to be aware with, what's going on in the world. You have to be aware what's going on locally, in your state, federal, your country's, you're like your country's neighbor and all that stuff. You have to be aware of what's going on in the world.
Oh, wow.
And some of the stuff is like, some of the news is like, it's fear mongering. So I feel like they use a lot of that to scare people out of their shares, and it's called weak hands. So if you're like, oh, that means you weren't really in it for the long haul. If you're just going to like sell your shares because you were spooked out, and then the stock just goes back up.
Wow.
So I feel like, in my opinion, like the media sometimes, that's why I really don't like listening to mainstream financial media. It's good if you're beginning. If you're learning, I watch it. But if you're really like, sometimes I don't like to listen to the news. I tune it out. Like,
you know what you're doing.
You're right. I trade the news. I don't really like buy into it. I just trade the news and I sell it.
Understood.
So sometimes it's probably best to just weather the storm, huh?
Yeah, sometimes, yeah. If you really believe into it. So, it just depends.
Okay.
So for my new person coming in that has that $2,000, and wants to invest, I guess the best thing to kind of say to them is, because, there is a risk factor to it and there's no running from it, is to set aside money that you're willing to lose. Maybe to prepare that cash and say, this is my stock cash. This is my play around money. And I think that gives you the confidence that you need.
That's how I started. How I started. Blew all my accounts.
Right. Because it's hard if you're playing with your light bill.
That's true.
Money
That's
and
true.
your rent money.
This is my car payment right here.
Yeah.
Hopefully it brings back some.
Could you imagine checking your stock and it goes down, man? You'd have a bad attitude the rest of the day if you knew that was your rent money. Like, I just threw in my rent money, man. I don't want to talk to nobody right now. So it sounds like it looks like the best thing to do is to first develop a bit of cash for the sake of investing, for someone who has that risk factor. Because I know, once again, with myself, I was okay with losing $5 to $10.
Yeah.
And slowly I started throwing more money in. And so I realized my confidence grew, more and more, the more I was involved and kind of knew what I was doing. So now this element he's brought to us today about how they intentionally might say something on the news, so essentially bully you into getting lost so it can go. That's a strategy. That's another level right there. I'm still an amateur, but just you saying that made me go, what? I didn't know they do that.
And sometimes the news will boost the stock. Even if it's BS or if it's real or not, it doesn't matter. Like the news, vaccine. Okay, well, Wall Street, they pumped the stocks up.
Oh, wow.
Yeah.
Oh, wow.
Oh, the stimulus check. Oh, they didn't do the deal. Stocks go down. It's crazy.
That's crazy.
In my opinion, I just feel like it's manipulation. It's a lot of manipulation in the stock market. So you have to learn how to play the game that they're playing.
Right. Yeah. Okay, so now let's talk about saving, right? Because we mentioned saving earlier and how it connects to investing, just general investing. A lot of people, I guess their mentality is, and so was mine as well, is to make as much money as you can or save as much money as you can, put it in a bank account and let it sit there. And I thought, oh, this is a great idea as well. Then I heard about this really bad word called inflation, right?
It's ugly. It's like the worst thing.
Right. And once I understood how inflation works up against my dollar today, it kind of changed things for me. So now what would be your suggestion or what are your thoughts on putting a bunch of money in the bank thinking, oh man, I got $30,000, $40,000. Well, I guess that's not even a lot today, assuming you're trying to retire with this. But what would be your thoughts on putting a bunch of money in the bank as opposed to finding a way to take that money that I'm saving and circulating it up against something like inflation?
Right. That's a great question. So I look at money like a tool, and you can use that tool to build, stuff.
Right.
You can use money to build wealth. So I look at it as like ammunition, like it's a weapon, and like you got to have like bullets, like when you fight wars, all this stuff. And so with inflation is like the enemy.
Right.
And so in order for you to fight inflation, you have to find assets that are appreciating. Because I think now the dollar has depreciated pretty much like 98% of since 1913, since the Federal Reserve came into being. And so someone has $40,000 in their bank account. Depending on the situation, me personally, I would suggest you put maybe like 70, 60% of it in the stock market and then just leave some cash just in case.
Back to the original question, putting your money in the bank, as we've always been taught, is not necessarily the safest thing. It sounds like one of the safest things to do is, number one, if an individual can come up with a business of their own of some sort, you have circulating cash that keeps moving because of the business that you're into, as opposed to letting money sit in a bank account and get old, and as it ages, it's losing its actual power. Right. So
no longer has that same value. Yeah.
Right. Because I know a lot of people still really believe I'm gonna put my money in the bank, and then when I retire and I hit 60 or whatever, I'll live off of this for the rest of my life. And I see now that might not, unfortunately, it's a good logical strategy.
Yeah.
I just don't know how that works as far as you hit retirement now and you're looking at this extra money and you're thinking, I'm good. And you're looking at it like, wait a minute, what happened? And I just didn't want our viewers to, because I know that was something I really thought that, oh man, I'm going to save, a couple $100,000. And if it sits there, if anything, it might grow.
Gain some interest.
So like in the old days, like when like the interest was pretty high and decent, like it made sense to leave your money in a bank account, like in the 70s, 60s. That's when the United States economy was like very sound and stable, and so it made sense back then. So, but that knowledge is from like baby boomers.
Understood.
So throughout, if you look at the interest rates, they've just declined because America, we spend money like drunken sailors, and so
China, like a bunch of money.
Yeah, we owe China, Japan. Yeah.
Oh wow.
Treasuries.
Man.
That's crazy.
That's another segment too.
Well, we're not politicians.
Well,
so
I mean, that leads me to my next question. I was going to ask you, how important, and this is particularly for you because you're a retirement planning specialist.
Right.
How important is it for setting up, I guess, investments for your retirement?
I think it's really important. Like tying back with inflation. You know, like you want to make certain returns in the market to make sure whatever you're putting in, it's making money too. And so I think it's really important to like be invested for your retire, because by the time you're working when you're 20, 30 and you didn't really save that much until you're 60, 70, like that inflation is like, it may not be worth as much when you could have maybe like 4 times your money within 2-3 years, or 5 times, 10 extra money, but you're getting like 1% each year, 2%, not even. Nowadays, some banks even offer like less than a 1% interest. Wow. I'll let you can find, let me know, I'll make it count. That's like 3%, 4%. Yeah. Cause that's easy money, like, especially if you have a lot of money. So it's all relative. But I mean, I think it's really important. Like, you need to save and invest for retirement, because things are getting more expensive. So when you retire, you're not going to have, you know, depending on your kids, they may not, you know, watch you. You could be on your own. Yeah. You're going to have to start paying for like milk.
Some bad kids, man.
Yeah.
Selfish.
You get old. You do all this hard work for your kids. You get old, and they're like, all right, old man. Nursing homes that way. That's terrible.
That's just part of the Western capitalism, like, family model. And I know in Africa, I was like, you live with your parents. You look at your grandparents, like, you take care of them because they took care of you, and they typically move in with you, I believe.
Yeah, I think a lot of different cultures have that.
Culture does.
Yeah, a lot of real family oriented, but I guess
Asia,
right. That's terrible.
Yeah.
But now let's talk about how an individual can set themselves up for a strong retirement. I want to talk about passive income, really good investment ideas. I know, can't remember who I was watching, but they talked about great investment ideas, and I loved it. What are some good investment ideas or passive income ideas for an individual who's looking at the future like, okay, I can't do this job that I'm at forever. Let me take some of my cash and start to prep a passive income idea. Like I know at one point people were doing the Airbnbs like crazy, right? I don't know how well that's doing, but it's still a shot, a really good shot. What are some other ideas that you can give our viewers into setting something up that will slowly grow, but eventually you'll get there type ideas?
I guess like invest in like businesses that can help you generate income. So like with the digital media and with AI, like I would tell people like look into like e-commerce, stuff like that for online sales. Start your own podcast, YouTube, talk about stuff that you're into. You know, just find things that you are that you're in passion with, and see if you can serve others.
All right.
Because I mean, I'm more into like investing, so it's easy for me to be like, yo, just, you know, buy certain stocks, buy certain index funds, and just like let it sit.
Yeah.
But
you found your little mojo,
right? You know, so that's my first. So like, I feel like when you want to build multiple streams of income, it's better for you to focus on that first stream, and then once you figure out how to automate it for yourself, and then you can go in and focus it. Because a lot of people, they try to do a lot at the same time, and it's just like you don't want to be the jack of all trades and not know anything.
Jack of many trades, master of none.
Yeah, master of none. Yeah. So I mean, because it's hard for you to focus when you're trying to like build, and you're just like. So right now, I'm just focusing on the stock market, trying to generate as much income as I can, and then hopefully, if I can, hopefully by next year or 2 years, I'll leave my job and then try to get in something else while I'm using that income to support my family, and then maybe that gives me enough time to like get into another venture. Because I'm trying to do my own little thing on the side, but I just feel like it's a lot of energy, dude. Like, really, like if you're a go-getter, go get it. You know what I'm saying? But it's a lot.
Now this is all about Line Impact. Is all about being the best version of yourself, and I'm always gonna tell people to go get it by almost any means necessary. Because I say any means necessary nowadays. Some people are ready to take it to an extreme that could put them in a position that
they don't.
Michael told me any means necessary. So for our guys and girls out there who might, you know, because I look at investing at not just numbers, right? I also look at investing like investing in yourself. Right. And finding your passion, something that, you know, you're really good at. And crafting that and working at that. That I think, and that has nothing to do with any numbers, right? And that's all on you. You are in control of how good you get at something based upon the time and investment that you put into that thing. So I think that's definitely another type of investment, man. And I know at one point I had this idea where, which wasn't just my idea. I know we've talked about it in the past. It's just like, yo, I'm gonna buy an ice cream truck.
Yeah.
I'm gonna buy all these people making all this money off of what are the little vans? Portable, I guess the mobile food truck. Excuse me.
Okay.
And I'm looking at guys, and they're making all this money from the food trucks, and I'm like, how'd you get started? Man, I just saw somebody else do it, and I threw my own logo together, man. I can get this thing. I know how to cook a little bit. I called my lady.
Tacos.
Yeah. So at the end of the day, it's not necessarily this miracle idea where it's you and God gives you this magical dream, and you're like, yeah. I think sometimes, man, you got to open your eyes and literally put your hands in the dirt and say, I'm about to create something.
Definitely have to be aware.
Yeah. I'm about to create something. So I think that's another level of investing that I definitely want our viewers to walk away with, where it's like, yo, even if you don't know anything and you feel like it's still complicated,
just do it.
Just do it. Man. Just do it. I love that, man.
All right. And that's going to conclude our podcast for today. I'd like to thank our special guest here, Hillario. Appreciate you for coming out here. You're very knowledgeable, and I feel like we got some great things from this.
Absolutely.
We're going to be putting his Twitter down in the link below. So if you would definitely like to follow, get some ideas, definitely real helpful. Also want to put in that this is not financial advice. So do your own due diligence and have a great day. Take care.